We have Cameron Brand, the Director of Research at EPFR Global, as well as Rob Cornell, Head of Research and Chief Economist, Asia Pacific ING, joining us on the show. Cameron, first coming to you, what do you make of the overall commentary and the fact that the street really chose to hear only the more dovish comments coming in from, Jerome Powell, and what does it do to the rate expectations for the coming meeting?
So certainly what I've been seeing for a number of weeks on the mutual fund flow side is, strangely enough, I would say a sense of optimism. And I think the fact that the Fed went with 75 basis points rather than the full 1% has reinforced that. Certainly all the initial commentary and conversations I've had in the wake have focused on the fact that Powell talked about the data points that the Fed will see between now and their September meeting. And I have to think that by September, some of those data points are not going to be screaming further hikes.
Right. When we just talk about how the markets reacted yesterday, especially Rob, when actually that 75 basis news came, markets were not volatile, which was not the case earlier in the last 3 or 4 Fed meetings. And then after the press conference, the market actually went up. You think markets are now, getting more mature in terms of reaction to how Fed reacts?
I'm not sure they're getting more mature in terms of how they react to the Fed. I think what they're beginning to do now is look a little bit forward and thinking, maybe there's 2 things that I think the market wants to believe. One is that we've passed the point of peak Fed hikes. And there was a hint yesterday that was the case, the suggestion that forthcoming hikes might be at a more moderate pace. That went down extremely well. And I think they're also looking for peak inflation to have passed as well. Yes, we had the 9.1 print, but if you look at the inflation expectations, they're coming down. The market believes that the Fed is going to achieve this goal of getting inflation down. And for them at this stage, that's enough. And they're sort of ignoring all the, we hear a lot of the stuff about recession. Are we in a recession now? Well, of course we're not in a recession now, Jerome. And that's not really, no one's really arguing that. The question really is, has the market ever really priced in the recession that looks as if it might have to happen? And they dance around this in their commentary about weaker growth and the labour market, which is, of course, a lagging indicator, and it's not going to drive the recession, but be a symptom of it, whether or not that's ever being priced in. And I think we still have, a slight risk in the background that could start to play a greater role in the coming months.
So we do have the Fed Chair, Chair Powell, talking about more financial tightening in the pipeline, leaves out details of when that is going to be possible, talks about the impact of all of this on the economy. And with that, Cameron, coming to you, a pertinent point being made by Rob there. Did the markets ever fully price in the ugly R word? And is that why maybe the bond market little unchanged? And how did you figure out that the way the dollar behaved after all of this commentary?
Well, I think that the market did sort of start to price in the R for a little bit back there in certainly June coming into July. But they've, I think, sort of really skipped ahead to the fact that the R word in their mind translates into a rapid return to the highly accommodative monetary environment that it has happily gotten used to over the past decade. And certainly, I feel it's going to be very hard for the Fed to keep rates at any meaningful level the moment inflation does start to roll over. For the past 10 years, they've been fighting to get inflation above 2%, while at the same time maintaining labor market strength. Many of the critics say that their mandate has ranged too widely. I think that it's going to take quite a bit for the sort of slightly rose-colored view of the market to sort of darken, shall we say.
Rob, let me come to you and get back to the point that we were discussing. Now, if you go by the respondents and the survey which is out, it does suggest that people are expecting it's going to be a 50 basis point hike in the next September meeting and not really a 75 one. And there is an expectation that come 2023, in the mid of the year, we might see a bit of reversal and the rates, cutting cycle as well starting. Is this something that you concur with?
Yeah, well, I mean, I think the key thing to say, and I think Powell would reinforce this as well, is what they do next is going to be data dependent. And between now and the next FOMC meeting, we'll have 2 labour market reports, we'll have 2 inflation reports. So that will really steer what they're going to do. But I think 50, where we stand today, given everything we know, looks a more plausible outcome for the September meeting than a 75. And yeah, I would certainly think that we ought to be.
You seem to be a little upset.
What do I do that I'm getting the order to export yarn, but because of the fluctuation in price of raw material, I simply do not manage?
Then hedge the price of cotton bale at exchange and you can have the delivery as well.
Really?
Of course, one can also have delivery of the standardized quality and quantity of cotton.
Wow, I booked the order only now.
अब डर सुनाई देगा। मिर्ची प्लस कहानियों का असली अड्डा।
Your advice in terms of how you should be raising that first paycheck from your investors?
Your conviction on the business is super critical. It is your conviction has to be reflected in the story that you tell your investors. Second thing is be truthful as an entrepreneur. Talk about your fears, the risks that you see, the execution possibilities, and also the passion that you bring along.
Most lenders look for how will you grow and scale the business so you can repay back, right? Whether it's debt or equity. What's important is, do you have a view to where this brand can go and how much scale can it get to?
Presented by IDFC First Bank. Always you first.
मेरे लड़के में हुनर और लगन की कोई कमी नहीं है, पढ़ाई में भी बहुत तेज है, बस उसे इंग्लिश बोलनी नहीं आती। हम गरीबों के बच्चों में यही तो है कि इंग्लिश बोलने में मार खा जाते हैं, वरना किसी से कम नहीं है मेरा लड़का। पर अब देखना, दिल्ली सरकार ने ये जो 3 महीने का इंग्लिश बोलने का कोर्स शुरू किया है ना, इससे मेरा बेटा भी फर्राटेदार अंग्रेजी बोलेगा और इंग्लिश बोलने वाला की बराबरी कर लेगा।
मैं चाहता हूं सभी बच्चों को अच्छी से अच्छी शिक्षा मिले, गरीब और मिडिल क्लास के बच्चे किसी भी क्षेत्र में पीछे ना रहें। अब गरीब और मिडिल क्लास परिवारों के बच्चे भी फर्राटेदार इंग्लिश बोलेंगे।
दिल्ली सरकार दिल्ली के युवाओं के लिए लाई है स्पोकन इंग्लिश कोर्स बाय दिल्ली स्किल यूनिवर्सिटी, जहां सिर्फ 3 महीने में आप फर्राटेदार इंग्लिश बोलना सीख सकते हैं।
जब खिलकर निकलेगा ये स्किल, सपनों से दूर जाएगा।
The children of today are the key to our future, and only a healthy child can build a healthy society. To keep them healthy, it is critical to detect and prevent the diseases that threaten them. In this edition of Times Network Living Room Conclave India Health Mission, leading experts discuss the best practices in pediatric and youth healthcare to ensure a safe and healthy future for India. Tune in to India Health Mission on Times Network.
The Meridian, where contrasts come together and sophistication runs wild. presenting a Jeep SUV that gives you the best of both worlds. The all-new Jeep Meridian, untamed sophistication.
Great to see ET Now coming up with this platform for nurturing the leaders of tomorrow.
Wishing best to all the people, all the startups and all the companies who have applied for Leaders of Tomorrow Award.
Wanted to congratulate ET Now Leaders Award for actually doing something like this and encouraging entrepreneurship for MSMEs.
How to receive the DT award in 2016. That's a time when nobody understands what Bharat Biotech is. Okay, that was it was so much important to me, honestly.
All the very best wishes to the longest running entrepreneurship and small business show.
Much awaited, much coveted. The 10th edition of Stellar Leaders of Tomorrow Awards are here with a bang, seeking participation from the bold, the brave, new age leaders. If you are the one, hit your wagon to the stars and register now.
Presented by IDFC First Bank, always you first.
Right now, Anjali is breaking a ceiling. Right now is the time of a better India. And it's time to find your place in it.
Good evening, hello, a very warm welcome to this edition of India Tonight with me, Vikram. And this Thursday evening, we're asking, where is the US economy exactly? Is it in technical recession or not? Because though growth is fluttering there, businesses are posting profits while inflation, of course, remains high. We see consumer spending. So what's the real story in the United States? Of course, back home, the headwinds that the industry faces is right before us. Then the question to ask is, why are the CEOs of Indian IT firms drawing larger and larger salaries? And of course, in sports, now with the chess Olympiad inaugurated in Chennai, more resources are getting allocated to sports in general. Can India up its medal tally on the international sporting arena like the Commonwealth Games 2022? All of those subjects lined up tonight on the show. Here are the headlines on India Tonight. Stocks in Wall Street coming under pressure after the U.S. GDP data shows that the world's largest economy's GDP fell by 0.9% for the second consecutive quarter, indicating that the U.S. economy is technically in recession. A stellar monthly expiry for the Indian equity markets. The benchmark indices climb over 1.5% each, with the Nifty 50 settling above 16,900. Bajaj Finance, Bajaj Finserv, Kotak Mahindra Bank are the top gainers in trade today. Mixed Q2 for Nestle India. Revenue has beaten estimates, but profits and margins are in line. Meanwhile, Jubilant Foodworks has seen a 63% jump in year-on-year profits, and those profits have come in at 113 crore rupees. And also on the show, we're trying to analyze the paychecks of the top CEOs from India's IT industry. While the salaries of the top bosses are touching new heights, the industry's performance in this quarter has painted a rather different picture. So are the big checks justified, and is the disparity between CEO and employee salaries widening? We are discussing this up ahead on India Tonight. Massive row has erupted after the Congress leader Adhir Ranjan Chaudhary has called the new president Rashtrapatni. Minister Smriti Irani has confronted the Congress's interim president Sonia Gandhi in parliament over this issue. The Trinamool Congress suspends Partho Chatterjee's membership. The Chief Minister Mamata Banerjee had earlier sacked him as the minister in her cabinet. Cash and jewellery worth more than 50 crore rupees have been recovered from Chatterjee's aides during those raids conducted by the Enforcement Directorate. The 44th Chess Olympiad has opened in Chennai in the presence of the Prime Minister and the Chief Minister of the state, M.K. Stalin. The Olympiad was moved out of Russia after it invaded Ukraine earlier this year. Meanwhile, the Commonwealth Games 2022 have also opened. They've opened in Birmingham with athletes from 72 countries, including India. participating in the games. The big story on India tonight is the latest U.S. GDP data, which shows that the second straight contraction is what has hit the U.S. economy. And according to the data by the Bureau of Economic Analysis, the U.S. economic growth has fallen. It's fallen 0.9% in the second quarter. The first quarter GDP had fallen by 1.6%. So this is coming after the Fed's decision on expected lines of a 75 basis point interest rate hike. And of course, on the jobs front, we're watching the weekly jobless claims, which have come in at 256,000 last week, and that too above street expectations. Meanwhile, the US 10-year treasury yields have fallen, and they've fallen to their lowest level since the 14th of April. So that's more or less the big picture on the US economy. But let's get perspective. Seth R. Freeman, Managing Director at B. Riley Advisory Services Growth, appears to be with us right now, and he's joining us from the stateside. Seth, great to have you with us. Home sales clearly have taken a tumble. Economists and every expert we speak to is warning of a potential recession ahead. But if you look at it, consumers are still spending. Despite that inflation we're talking about in the US, businesses by and large, we're looking at these numbers, they're still posting profits. And the economy, the US economy, keeps adding hundreds of thousands of jobs each month. Though, of course, there is a rise in jobless claims. I would say that there are mixed signals emerging from the US. So keeping the Fed move of 75 basis points in mind, where is the US economy really headed, according to you?
Well, I don't think we're in a real recession yet, although, 2 negative quarters is the typical definition. But I think there's a whole variety of broad indicators that really have to be brought into the analysis, and you mentioned some of them, but we are already seeing a big hit in the real estate market, and we're going to continue to see pressure, especially on consumers. Even though consumers are spending now, we're also in the summertime where consumers tend to spend more money, but the feeling of ebullience from higher stock prices and rising real estate values is definitely on the decline.
So, Seth, the fact is that the US economy did shrink from April through June for a second straight quarter. That is up. The writing is right there. It has contracted at an annual pace of 0.9%. And hence, we have these rising fears of approaching gloom, a possible recession. The question is, can the Fed pull off a soft landing by increasing rates just enough to control inflation and not let the economy run into recession? Is that even possible? Or has the Fed missed the bus on that?
Well, this is a recurring question: is are they too late to avoid a recession? And are they going to overshoot by raising rates too rapidly? I think we saw some stocks generally rise yesterday and today in India because of some certainty by the 75 basis point increase and some words from Fed Chair Powell. But the problem is that there's a lag time on the effect. I was looking this morning. This is also the week and next week for earnings reports. We saw Ford announce 400% earnings increases at a time when the automakers have been complaining they have supply chain problems. So there's a lot of conflicts in terms of or conflicting data. And that's why it's hard to say specifically, are we in a recession? But I think we're going to see a massive slowdown in consumer spending. It's a huge difference to get a residential mortgage or even a commercial mortgage when rates are 3%, 3.5%, versus where we're heading, which is 6% and higher.
Despite the kind of inflation that we are seeing, Seth, the rate hikes and the declining consumer confidence, one thing that I was pointing at is, and it's remained quite solid, the job market, the most crucial pillar of the economy. Is there a disconsonance in the fact that the job market is still holding up despite a faltering growth story? How do you explain this?
Well, I think we have to look at the types of jobs that are growing. I'm here in the San Francisco Bay Area, and we're seeing, technology companies that have been high growth companies, some of the companies that have been leading the stock market gains, and large startups laying off hundreds and hundreds of workers. So we really have to dissect, where are the job gains coming from? And we lost a tremendous amount of workers due to COVID-19 in the service industries, and that's where we're seeing some gains. We're not necessarily seeing gains in middle management and upper middle management type jobs.
Fair enough. Seth Freeman, thanks very much for joining us with your perspective on the U.S. economy as it stands. It's still a moving piece where exactly we are on the possibility of a recession. And of course, that is going to have a bearing on how Wall Street does, how global markets fare, and how the world economy moves at large. We'll be watching